It's time for business here on France 24 with Matthew Warren. Good morning once again, Matthew.
Hi, Catherine.
We're going to start with something we've been reporting on in the news, that long-running territorial dispute between China and Japan over some uninhabited islands, and it's having an impact on business.
That's right. The row over those disputed islands has seen customer boycotts, particularly for Japanese car makers in Japan. Sales have been plummeting for several months now for many of those companies. Well, France 24's correspondent in China has been to Beijing to find out how Japanese car makers plan to fight back.
In his Toyota dealership in Beijing, Li Tianwei shows off the latest models without too much conviction. For 7 months, customer numbers and sales have been in decline.
Until September, we sold about 5 cars every day. Now it's only 3 or 4.
September last year was when it all changed for Toyota, Nissan and Honda after Japan's government nationalized the Diaoyu Islands, which Beijing claims as Chinese territory. Amid angry protests, calls for a boycott of Japanese cars quickly won popular support.
No one says that Japanese cars are no good. They just say that because the brands are Japanese. When it comes to what their friends and other people around them will think, they prefer not to buy.
The crisis for Japanese brands shows no sign of ending. At least that's the word on the streets of Beijing.
As a Chinese person, I'm not even thinking about Japanese brands, because now I can easily find other brands at the same price. So I'll choose a German or an American brand.
The big Western brands were already muscling into Japan's most prized territory, China's middle-class market. Audi and BMW, for example, have made their cars longer to suit local tastes, and they've cut prices too.
While their rivals have been constantly innovating and updating, the Japanese have carried on relying on their old models. That's the main reason for the situation today. The Diaoyu Island incident last year just made things worse.
With models like the new Nissan Livina, Japanese manufacturers are pinning their hopes on the cars they're launching in Shanghai to help them get back in the driving seat of the Chinese market.
OK, well, we can take a look now at how the Asian markets are getting on this Tuesday.
Well, they're all down, not helped, of course, by that escalating tension in those islands. The Shanghai Composite, in particular, off by 2%. Now, sentiment there also being driven by fresh data on manufacturing in China. Now, this is PMI data. We call it, it's a survey of purchasing managers. Now, they're seen as having a pretty good view of what's really happening in the economy. Now, the latest data on that for the month of April says that the figure that for Chinese manufacturing is 50.5. Now, what we always look at is any number above 50 shows things continuing to expand. So it's good in that sense. But as you can see, it's below March and it's also below what was expected. That's raising new fears about the robustness of the Chinese economy there.
A little red light, perhaps. OK, well, we can get some of the day's other company news now. Online streaming company Netflix beat forecasts with its latest results. It added an extra 3 million subscribers in the first 3 months of the year. Netflix says creating original content has helped. It says the Kevin Spacey drama House of Cards helped to drive those customer numbers.
But results have worsened at the toy maker Hasbro. The maker of toys, including My Little Pony, made a net loss of almost $7 million. But that was better than analysts had expected. And one bright spot, Hasbro said that sales of its Monopoly board game were boosted by an online contest to replace one of the playing tokens.
And Twitter has struck a deal to boost its advertising revenues. It's signed up with Starcom MediaVest, a major advertising sales group. The deal will offer Starcom clients preferred advertising slots on the messaging network. Now then, a list of Britain's richest people has revealed that French residents are among the wealthiest. That's rather a surprise, perhaps.
That's right. We know there are lots of French people in London. There have been stories about many perhaps wanting to leave France because of higher tax rates. But, well, this seems to suggest that it's true. This is the Sunday Times Rich List, it's called, and it says that French residents are third after Russians and Indians in the UK in terms of their wealthiness. Well, to find out more, this report from Olivia Salazar-Winspear.
In the streets of Mayfair, sports cars and Bentleys are a common sight. Despite the recession, cars worth hundreds of thousands of pounds are parked outside the capital's luxury stores. They're rarely driven by their owners, as chauffeurs wait for their clients and their shopping bags. Whether they come from Russia, the Middle East or China, the super rich are well established here in London. The UK capital now has 40,000 residents worth over 30 million euros each, and their shopping habits provide a welcome injection of cash for high-end retailers.
We've been seeing growth of sort of somewhere between 20 and 30% per year over the last 5 years coming from those markets. And the average spends are now getting close to £2,000 on Bond Street per Chinese shopper.
They're snapping up property too. This townhouse is valued at £20 million and has all the mod cons and services you'd expect from a 5-star hotel. With a lift inside the house, 5 bedrooms and a swimming pool, even the wealthy are still interested in a bargain.
They will always try and get a better price for it. It's very rare to find someone who will walk in and pay the asking price.
And the super rich are becoming an increasingly international set, boosting the market for private jets. This showroom offers a taste of the high life for those looking to invest.
It might be in Nigeria to Mongolia, in China up to Ukraine and things like that. And the distances are very far, so you need a bigger airplane that has longer range.
A trickle-down industry that's said to employ some 30,000 people in London, and it's growing. This elite group of super rich is set to double in numbers over the next 10 years.
And that does wrap up the business news. Thanks very much, Matthew Warren, for bringing that to us.